Preparing for a transfer agency operations at CAMS, KFintech, Computershare, SS&C interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a transfer agency team do in the mutual fund or asset servicing lifecycle? The interviewer wants to assess your basic understanding of transfer agency as investor record keeping, transaction processing, compliance support, and service delivery between investors, distributors, fund managers, and custodians. While answering, focus on shareholder register maintenance, subscriptions, redemptions, switches, account changes, confirmations, distributions, regulatory checks, and how transfer agents support asset managers and investors operationally. Transfer agency is the shareholder record-keeping function for a fund. I would describe it as the team that maintains investor accounts, processes subscriptions, redemptions, switches, transfers, and non-financial changes, and supports statements, confirmations, tax reporting, and distributions. In firms like CAMS, KFintech, Computershare, or SS&C, the role is operationally critical because the fund's investor register, cash movements, and service experience must remain accurate, compliant, and timely. Question 2. Walk me through the end-to-end process for a mutual fund purchase or subscription transaction. The interviewer is testing your understanding of transaction capture, validation, cutoff rules, payment matching, NAV applicability, unit allotment, investor communication, and exception handling in transfer agency operations. Make sure to cover receipt of application, KYC validation, bank and payment checks, cutoff timing, NAV application, unit creation, confirmation generation, and reconciliation with bank or fund accounting records. A subscription starts when the investor instruction is received through an online channel, distributor, branch, or file feed. I would first validate mandatory fields, KYC status, scheme details, bank information, and payment realization. Then I apply the correct cutoff and NAV rules, process the transaction, allot units, and generate confirmation. Finally, I ensure cash and unit records reconcile with bank, fund accounting, and the investor register. Question 3. How would you explain the redemption process and the key controls around payout? This question evaluates your knowledge of redemption validation, unit availability, lien or lock-in checks, NAV processing, bank account verification, payment release, and investor protection controls. In your answer, talk about valid instruction checks, signature or digital authentication, unit balance, exit load, applicable NAV, payout bank verification, turnaround time, and post-payment reconciliation. Redemption processing is about paying the right investor for the right units into the right bank account. I would validate the request, investor identity, folio details, unit balance, lock-in restrictions, lien status, and bank mandate. Once the applicable NAV and any exit load are applied, units are reduced and payout is triggered through the approved payment route. The final control is reconciliation between the investor register, bank payout file, and accounting records. Question 4. What KYC, AML, FATCA, and CRS checks are relevant in transfer agency operations? The interviewer wants to assess your awareness of regulatory onboarding requirements, investor due diligence, tax residency reporting, sanction screening, beneficial ownership, and escalation of suspicious activity. Be sure to mention identity verification, address proof, PAN or tax identification, beneficial owner details, politically exposed persons, sanction screening, FATCA and CRS classification, and ongoing monitoring. Transfer agency is not just transaction processing, It is also a compliance gatekeeper. Before account creation or transaction processing, I would check KYC completeness, tax identification, residency, beneficial ownership, and risk classification. AML controls include sanction screening, PEP checks, unusual transaction monitoring, and escalation of suspicious activity. FATCA and CRS are important for identifying reportable investors and ensuring the fund can meet cross-border tax reporting obligations. Question 5. How do cutoff time and NAV applicability work in transfer agency processing? The interviewer is testing your understanding of fair treatment of investors, regulatory cutoff rules, timestamp controls, payment realization, and the operational impact of incorrect NAV application. While answering, focus on transaction receipt time, complete documentation, payment availability, scheme-specific cutoffs, same-day or next-day NAV rules, audit trails, and investor fairness. Cutoff rules decide which NAV applies to a transaction. For example, if a valid subscription reaches before the prescribed cutoff with required payment conditions satisfied, it may get same-day NAV. Otherwise, next applicable NAV may apply. The key operational control is accurate timestamping, completeness checks, and no backdating. Wrong NAV application can create investor disputes, compensation events, regulatory findings, and reconciliation breaks downstream. Question 6. What reconciliations are important in transfer agency operations? This question evaluates your grasp of operational control, investor register accuracy, cash unit reconciliation, suspense management, and coordination with fund accounting, banks, custodians, and payment gateways. Make sure to cover unit reconciliation, cash reconciliation, bank realization, payment rejection, suspense accounts, dividend payout reconciliation, distributor transaction feeds, and timely investigation of breaks. The most important reconciliations are between cash, units, and investor records. I would reconcile subscription money received against units allotted, redemption payouts against units reduced, and dividend payments against eligible holdings. Breaks can arise from failed payments, duplicate references, rejected bank credits, or file upload issues. A strong TA process tracks unmatched items in suspense, assigns ownership, follows aging reports, and clears breaks before they become client-impacting issues. Question 7. How are dividends, distributions, or dividend reinvestments handled by a transfer agent? The interviewer wants to assess your understanding of distribution events, record date eligibility, investor option handling, payout versus reinvestment mechanics, tax treatment, and communication controls. In your answer, talk about record date holdings, distribution rate, payout bank details, reinvestment NAV, tax deduction where applicable, investor communication, and reconciliation of distributed amounts. For a distribution, the transfer agent identifies eligible investors based on the register as of the record date. If the investor has selected payout, the amount is credited to the registered bank account after any applicable tax deduction. If the option is reinvestment, the distribution amount buys additional units at the specified reinvestment NAV. The process must reconcile total declared distribution with payouts, reinvested units, rejected payments, and tax reporting. Question 8. What controls would you apply for non-financial transactions such as bank change, address change, nominee update, or transmission? This question evaluates your ability to handle high-risk account maintenance requests, documentation validation, fraud prevention, investor servicing, maker-checker control, and audit trail maintenance. Be sure to mention request validation, documentary proof, signature or digital authentication, cooling periods for bank changes, legal documents for transmission, maker-checker approval, and customer communication. Non-financial changes can be riskier than normal purchases because they may redirect money or ownership. For a bank change, I would validate documents, match investor identity, apply maker-checker review, and follow any cooling period before redemption payout. For transmission, death certificate, legal heir or nominee documents, and indemnities may be required. Every change should leave a clear audit trail and trigger confirmation to the investor. Question 9. How do you handle rejected or incomplete investor transactions? The interviewer is testing your practical approach to exception management, documentation gaps, regulatory compliance, timely communication, SLA adherence, and preventing incorrect processing under pressure. While answering, focus on identifying rejection reasons, logging exceptions, notifying investors or distributors, holding money appropriately, avoiding unauthorized assumptions, aging follow-up, and final closure. I would not process an incomplete transaction just to meet volume targets. First, I would identify the rejection reason, such as missing KYC, invalid bank details, signature mismatch, wrong scheme code, or payment mismatch. Then I would log the exception, notify the investor or distributor with clear requirements, and track it through SLA aging. If money is received but the transaction cannot be processed, it should be handled through defined suspense or refund procedures. Question 10. What service levels and communication standards matter most in transfer agency client service? The interviewer wants to assess your client servicing mindset, SLA discipline, query prioritization, investor empathy, regulatory response timelines, and ability to communicate accurate operational status. Make sure to cover query categorization, turnaround times, first-time right responses, escalation, ownership, regulatory sensitivity, complaint handling, and clear communication with investors, distributors, and asset managers. In transfer agency, service quality is measured by accuracy and speed together. I would categorize queries by risk and urgency. Payout failures, transaction disputes, complaints, statement requests, tax forms, or account changes. A good response should be clear, evidence-based, and within SLA. If resolution depends on another team, I would still own the communication. Poor communication can turn a simple operational delay into a formal complaint. Question 11. What AML red flags might you notice while working in transfer agency operations? This question evaluates your ability to identify suspicious investor behavior, unusual transaction patterns, sanctions concerns, third-party payments, rapid movements, and escalation responsibilities without overstepping compliance decisions. In your answer, talk about third-party funding, frequent subscriptions and redemptions, inconsistent investor profile, high-risk jurisdictions, multiple accounts, structuring, unusual distributor patterns, and compliance escalation. AML red flags in TA can include third-party payments, rapid subscription and redemption with no clear investment rationale, transactions inconsistent with the investor profile, links to high-risk jurisdictions, or repeated small transactions that appear structured. I would not accuse the investor or make a final judgment myself. My role is to document the facts, follow internal escalation procedures, and ensure the compliance or AML team reviews the case promptly. Question 12. Why are maker-checker controls and audit trails so important in transfer agency? The interviewer is testing your control mindset, understanding of operational risk, segregation of duties, fraud prevention, regulatory audit readiness, and accountability for investor-impacting changes. Be sure to mention dual review for sensitive changes, system logs, user access, timestamping, evidence retention, exception approvals, prevention of unauthorized processing, and audit or regulatory inspection support. Maker-checker control reduces the risk that one person can create, modify, and approve an investor-impacting transaction. It is especially important for redemptions, bank changes, transmission, and high-value institutional instructions. Audit trails show who did what, when, and based on which documents or approvals. In a regulated environment, this protects the investor, the fund, and the transfer agent during disputes, internal reviews, and regulatory inspections. Question 13. How do distributor, broker, or intermediary codes affect transfer agency processing? The interviewer wants to assess your knowledge of distribution channel data, commission or trail attribution, investor servicing ownership, transaction routing, and regulatory suitability information. While answering, focus on correct distributor mapping, ARN or broker codes where applicable, direct versus regular plans, commission impact, transaction source, correction handling, and reporting to asset managers. Distributor or intermediary codes help identify who sourced or serviced the investor transaction. In markets like India, correct ARN or related codes can determine whether a transaction is treated as direct or regular and may affect trail commission reporting. Operationally, wrong mapping can create investor complaints, distributor disputes, and reporting errors for the asset manager. I would validate the code at capture, follow correction rules, and maintain evidence for any changes. Question 14. What data privacy and information security practices are important in transfer agency roles? This question evaluates your awareness of sensitive investor data, confidentiality obligations, access control, secure communication, data retention, cyber risk, and compliance expectations in large administrators. Make sure to cover personally identifiable information, bank details, tax data, need-to-know access, secure file transfer, password discipline, clean desk practices, phishing awareness, and breach escalation. Transfer agency teams handle highly sensitive data, identity documents, bank mandates, tax residency, holdings, and transaction history. I would follow need-to-know access. Avoid downloading or sharing data outside approved channels. Use secure file transfer and verify recipients before sending reports. I would also be alert to phishing or social engineering, especially around bank changes and redemptions. Any suspected data breach should be escalated immediately under incident procedures. Question 15. A large institutional redemption arrives close to cutoff, but one required authorization is missing. What would you do? The interviewer is testing your judgment under pressure. Ability to balance client service with control, cutoff discipline, authorization validation, escalation, and prevention of financial or regulatory loss. In your answer, talk about checking the mandate, confirming receipt time, identifying missing authorization, escalating quickly, documenting decisions, avoiding backdating, and communicating implications clearly. I would first verify the exact receipt time, account mandate, transaction value, and missing authorization requirement. Because it is a large redemption, I would immediately escalate to my supervisor or authorized control team, but I would not bypass documentation or backdate receipt to meet cutoff. If the missing approval arrives within valid timelines, processing can continue. If not, I would explain the NAV and payout impact clearly and maintain complete evidence. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.